Good morning, everybody, and welcome to MarketStream. It is the 13th of June, and we are going to take a look at Asia. My name is Joseph Cusick with the Cusick Group Securities off my money block, and I want to say two things. One is, I saw a good buddy of mine, my old spiritual advisor from the floor, KGK. Kevin, thanks so much for the kind words yesterday. I appreciate everything that you said about the show, so look forward to seeing you back down there. Also, overnight, got the headline, Dennis Rodman in North Korea. It's all going to get solved now. I feel so good about this market. But all kidding aside, we had a lot of mixed action overnight in Asia, and that should be expected. We have some key meetings that have kicked off. We have the Fed here in the States. In Japan, you saw that the Nikkei actually finished down about 9 points. But really what's notable there is that they're waiting for the Friday economic assessment. The expectation is to maintain policy going into that event. We did see that the materials market, though, in Japan was under pressure. And there's one thing that I want to point out here, because I've heard a lot of ETF pundits and just general portfolio pundits out there talking about diversification. And specifically as it pertains to how most people here in the United States are positioned in the S&P 500, the NASDAQ, the Russell 2000, and then they get into bonds and other asset classes. And then they delve over into regionally based or global type of investments, like in the Nikkei in Japan. And the one thing that I want to note is, as you could see, the black line right here is the S&P 500. I hope everyone can see that. I'm just going to tell you right now, I don't see a lot of diversification being invested in Japan versus being invested in the S&P 500. What I am seeing is that there could be potentially larger opportunities for upside or downside, right? You can see the spikes. The bars here are the United States. The black line is the Nikkei. The black line is the S&P 500, and the orange line is the EWJ, which is the ETF that tracks the Nikkei. And so I want to be very careful about when you think that you're investing in Japan, that you're diversifying your portfolio. As a matter of fact, true diversification comes into different asset classes. When, for example, let's say that you want to put yourself in gold, and I'll just use the ETF GLD. Now, gold is a diversification tool. Another one, as you can see, when the market is going up, gold was going down, right? The market's kind of flat and grindy and going up, gold went up. So you see some correlation there, but that doesn't mean that it has to sustain itself. Another asset class, too, that would be considered more of a diversification tool would be the volatility index VIX. That's the yellow line. When the market goes down, VIX goes up. When the market goes up, the VIX goes down. Now that is a diversification tool, folks. That is a diversified asset class. One that's not going to be correlated, so highly correlated to your general core portfolio being long S&Ps, long NASDAQ, long Russell 2000, even long the bonds here in the United States. And the bonds have been traditionally an asset class that from a price perspective would move in the opposite direction typically, but not as of late and as of over the past couple of years. So just wanted to point that out so that all of you could start seeing more and more of what we mean by diversification, and also just so that you could start thinking about how you structure your portfolio, that it truly is meeting your needs, your desires. And you can always come back and talk to me. I can give you a total breakdown in about a half hour or less if we just sit down and meet. Now let's take a look at the Shanghai Composite. Now China really was mixed action, started the session a little bit lower but ended to the upside, up 13 points. That's good for 0.4%, as you can see right here. What's notable here is the People's Bank of China. They added about 40 billion yuan in liquidity. That's what basically bolstered the market into the end of the day. Let's watch this one very closely. It's now staggering on its 50-day moving average. Any weakness and challenge of 50 and break will mean that the 20 becomes into play, which means that once those are both broken, that the bears have taken control in China. We'll watch that one very closely. Looking at Hong Kong, though, right off of the mainland, we really saw a lot of movement in gaming names. For example, Sands China and Galaxy Sands, both up right around 5% overnight. Let's see if that actually starts to impact the gaming names here in the United States, the ones that we know, like the Sands, taking a look at Wynn Casinos and so on and so forth. You can see how this action there is impacting it. And then finally, India. Now, India is still right at its 20-day moving average. So the bulls clearly are still in control, but the recent pullback on last Friday got a nice bounce, but still right at that close from last Friday after the tech pullback. This is something I want to watch very closely in India. A challenge to that 50-day moving average is going to be a test of what has been pretty much of the strongest index in Asia. Really mixed action in some key sectors. Banking, mixed. Technology consulting, mixed actions. So with that mixed activity, not seeing a lot of cyclical activity, seeing mixed action, maybe some profit taking where there's been some nice moves. So the bulls clearly are still in control, but a challenge of this green line, the 20-day moving average or the 50-day moving average, means that they're going to be on their heels and they need to fight pretty strongly. All right, folks, that's it for the overnight action report for Asia. Join me. I will be talking at 7:45 Eastern. Central, and 8:45 Eastern on all the stuff that's going on in Europe. So join me here at MarketStream. See you then.